Welcome to FX Street, Currency in Play. Today's guest is Mr. Ed Matz from Matrix Trades. Ed, very good morning to you.
And you, good sir. It's good to have the boss on the show.
There you go. And it's good to know that 32 years ago you were trading in the pit. So we're talking about a couple of old boys here who know what they're doing. Right, let's go straight into some slides that you kindly sent us. The headlines, top trends. Hopefully it will appear. Great British pound, not so great at the moment against the US dollar. Open positions in October expiry, calls rise. So the buyers are coming in on the pound, are they, Ed?
Yeah, in the short term, a lot of it's actually euro sterling. People got a little bit overexcited. We talked previously about this is mirroring the same price action as the fat finger spike. Have we seen the top? I don't think so. Is it going lower first to squeeze those longs out? Yes. And cable is obviously a function partly of the dollar, and it's doing the same thing. People got overexcited on downside and we're squeezing. And I think people will be surprised how far it can squeeze before it backs off again.
Understood. In terms of the ECB, all eyes on Draghi, expected to talk tapering according to ANZ. That's tomorrow. Are the sellers going to come in around this 120 level?
Well, they want to, yeah, for sure. I don't know if to what extent the ECB is actually going to talk about taper. They're probably going to talk about taper in October. So I'll be surprised if they did anything really dramatic. People are really looking more to the October meeting, and probably the discussions will be about what they're going to do in October rather than what they're going to announce today. So, you know, I think people are going to get a little bit overexcited about it, but I think it's going for the highs again, and people will get a chance to sell 120 plus. Just give it time, and it'll come back down again. Yep.
Understood. Right, in terms of the US 10-year Treasury yields dropped to a 10-month low. Have the Fed gone too soon, I wonder?
Well, it's funny, isn't it, how you back along 6 months, 12 months ago, and everyone was saying the Fed's behind the curve.
Yeah.
Now, apparently, they're not.
They're ahead of the curve.
They're on a completely different Grand Prix. And so, you know, anything they do, they can't get right. But in fact, I think what they've been doing has been proven right. I personally do think they've gone too far, but that's for, you know, reasons we've talked about in previous webinars about how we see the potential for a major stock adjustment coming in the next few weeks and months, and that will, in retrospect, will show that the Fed has gone too far. You cannot tighten in a disinflationary growth environment where stocks are overvalued. History shows stocks suffer as a consequence, and that's what we're looking at. And as a result, we don't think the Fed's going to raise rates. I'm not going to say ever again, but certainly not in 2017.
Maybe it's a time for a man from Goldman Sachs to be running the Fed. Boom, boom. Right, let's talk. You've sent a humorous slide. What's this all about?
We try to produce a slide that sums up certainly what we're thinking, but what people are thinking in the market. And it's in the jungle. It's wild. It's woolly. And you see there's a bus full of wild animals. And obviously, the two headlines we've got is Bank of Canada today, whether they're going to raise rates 50-50 on that one. I think the market is probably 55 against. And the ECB, similar story for tomorrow. People wondering, as you said, about whether they're going to taper, whether they're going to announce it, or whether they're just going to prepare themselves and not tell us about it. And so obviously that comes on the back of Korea and Donald Trump's perpetual shooting himself in the foot. He's obviously trying to shoot Kim, but he's just shot himself in the foot. And that kind of reflects, like, and there you've got the United Nations in the corner, the toothless crocodile, or probably alligator. I don't know enough about.
Very good. You've clearly got too much time on your hands. Right, let's get back to some technicals. What's on the next slide? The sentiment gap, Aussie US, US dollar CAD, and dollar yen.
It's the thing about foreign exchange markets is we are the tail of the interest rate dog, the bond market dog. In other words, markets, foreign exchange, currency pairs are driven by the interest rate differential. If they're not, they cannot sustain that move over time. In other words, they come back to the well, in this instance, we're showing the 10-year differential, but it does depend on whether it's an inflationary driven market or whether it's a policy driven market. If it's policy, then it's obviously shorter term rates. But as you can see, it's really about inflation with the 10-year. Top left, we talked about this, that euro dollar cannot sustain the rally until the interest rate differential catches up, in other words, meets it up. And as you said, 10-year notes at a new yield low yesterday. And bunds, although they're they are moving as well. They're not moving as much as the bonds. So you can see the differential is coming back, which is what we need to see for this uptrend. And I think it is an uptrend, although it's got a correction coming for it to be sustained. So next week, 2-3 weeks, we should see those come back. And a couple of interesting ones. We've been talking about the Aussie. The Aussie is behind its differential, which is one reason why it's gone bid, particularly with US yields coming off. Interestingly, dollar yen bottom right hand corner, you can see it's completely out of kilter. Of all the differentials that match the currency, the closest correlation is between dollar yen, and arguably it's a real differential, real interest rate differential, but certainly also the nominal, the 10-year differential. And you can see that dollar yen's been trashed as a follow through on the back of Korea, and yet the differential is higher, saying there's something that cannot be sustained there. Personally, I think it's dollar yen. 108.10 is a massive level. Yeah. They may push it, but I think it's got upside potential there. Or either that, or the world is going to collapse, and you'll see that differential move with it. So, but interestingly, on focus today is dollar Canada.
Okay,
of all the currency pairs out there that's maxed its differential in recent time, dollar Canada has nailed its differential. It's just moving in sync, which is very interesting.
Okay. So we're looking at that slide. What can I take from that slide?
The interest rate differentials?
On the dollar CAD.
On the dollar CAD, well, funnily enough, it is actually, I mean, this doesn't tell you anything, it is matching, whereas before it was diverging on the top correction, it is matching the differential. So it does come down today, in terms of interest rates only, comes down to how the bond markets move in reaction to the Bank of Canada meeting. We do have a very clear, strong technical view, but we can't base it on any divergence with the differential. The differential in itself is saying, I'm with dollar Canada on this one. So it doesn't actually tell us anything in itself.
Okay, so let's move on to the next slide. And you've got a reference to the 1987 map. What's this telling us?
Well, again, back along, one thing most people who follow us will know that we've been bullish as hell for the last 7 years, stock market, and now we're turning bearish based on historical price action, based on the fundamentals, into market technical sentiment. Everything is saying the same thing, that we're coming very close to a window of stock market adjustment, shall we call it politely.
Beautifully put, sir.
And one thing we've done is we've actually been quite busy in the last 2-3 weeks, is building a crash trade portfolio to cover all markets, not just the stock market, but currencies as well, to see how they react, how they should react, how they've reacted previously. And one market actually that I'm not really focused on or being excited by is dollar Canada, because if you think about it, if the stock market comes off aggressively, oil's a risk asset, comes off aggressively, so limits the potential on the downside for dollar Canada, because obviously implies a weaker oil, and it just traps it, so you don't get so much volatility. But saying that, you can see on this chart alone that dollar Canada is tracking 1987, and it has a bit of a surprise, it says, for the next week or so, because it's broken to new lows, 124.15. And yet it says it's going to ramp back up, but it's nothing, it's just a squeeze before it goes down again. So that's kind of interesting.
So we're suggesting history does repeat itself.
Well, I'm a great believer in that, but I wouldn't just say, I mean, we're not believers of following price action alone. What we look for is a similar set of conditions that explain why history will repeat itself, why price action is following similar patterns. And that's our starting point. We need an address, we need a logical argument to go in and look at price action to see if it's similar. And obviously 1987 is our copybook in the short, medium to long term, has been, so is 1929. But you can see dollar Canada is doing something very, very similar to 1987, which is interesting and helpful for dollar Canada, possibly for today. But it's also saying this is further evidence that our map is right. If dollar Canada is following it, dollar Canada is not the volatile beast in the stock market crash, then it's saying that, it's further evidence, and it's interesting on dollar Canada. So,
okay, so let's take a look at the hourly chart on the dollar CAD, see if we make some money out there. What are you looking to do? Basically sell into the upper trend line?
Yeah. Basically, it's saying there's scope. although it's broken to new lows, and although and this is the one proviso, unfortunately, the yield has got, I would have hoped the differential would not have broken to new lows, which would give us real confidence in fading this one. It's saying that even though we could well spike down on the meeting today, that we should spike. Typically, it does spike down on a Bank of Canada meeting, and then typically it ramps after the meeting. And that is basically in line with our projection there that we're looking, if we can get a new low, we'll certainly buy it, but 124.45, and the world in his dog is going to say, wow, you know, it's not a downtrend, and ramps, and they'll be, you know, hopefully getting carried away when it gets closer to the highs, maybe not quite so high as the high, what I would call a driftwood formation, where people are getting long for 127.75 and it falls short before it continues its downtrend, just like 1987.
Okay, so let's move on to the euro US dollar. You've got 3 slides there. What is that telling the audience?
Well, it's not just, obviously the thing is one thing we do at Matrix Trade is we look at what's driving a market and look at historically what tends to happen, because people tend, in similar conditions, similar events, tend to position in a similar way. And as a consequence, it's amazing how the price action tends to repeat itself into and out of those meetings. Or I would say almost regardless of the result, but obviously on 1 or 2 momentous occasions or big meetings, when they do something slightly different, obviously it won't necessarily follow. But in the case of ECB, given that we're not looking for anything particularly special out of tomorrow, then it's curious how the euro-dollar, euro-sterling and DAX, in fact, are following previous ECB meetings. We've marked out, I don't know if your viewers can see it clearly, but the white line is the Draghi average. The yellow line is what it's done historically since the ECB's been going. And the pink one is well, obviously the different colors represent the different markets. What it's saying is that we should hover, go bed into the meeting as far as the euro dollar is concerned. People talking about taper, you never know, let's get long for that one-off. Yeah. And it doesn't happen, and whack, it goes down. And the same thing with euro sterling, which is why we're waiting for lower levels to see if we can buy into it for another run at the highs. And DAX, well, DAX is obviously a stock market and driven and drilled by North Korea and the Americans coming into the game late yesterday and obviously pushing it down. But you can see as well into ECB has scope to rally. If we can get another new low today, then that'll be good.
Okay, well, we're running out of time. Let's have a quick look at the economic calendar for today. Any movers and shakers there in terms of the US? We've got the market PMI composite, the ISM non-manufacturing. In Germany, we've got Merkel speaking, and in the States this evening, we've got the Fed's beige book. Anything you're looking at there with any great interest?
Well, actually, I'm probably more interested in what Trump's going to do with China, actually, because that's quite a big one, because obviously with North Korea and what comes out of that. I was half expecting Boris Johnson yesterday to suggest they had a game of whiff-whack to sort out the differences, because at the end of the day, they're not going to sort out their difference. It was interesting, Putin said that North Korea was reacting the way it was because it was scared. It will only change if it feels reassured. Well, how's it going to feel reassured? I mean, at the very least, they're going to toughen up sanctions, and they're going to keep going on about stop the nuclear missile tests, etc., which they're not going to do until they see some sort of reconciliation. So I'm suggesting, if not Boris, that they get together and have a game of whiff-whack. I think that's probably the easiest and most likely way to resolve the crisis out.
Well, on the Mail on Sunday, Boris Johnson came, there was a big headline from their political commentator saying that Boris has come out of everything that's happened since Brexit well, and the reason is because he said nothing. Maybe this is the time that he gets into the wrestling ring. Ed Matz from Matrix Trades, thank you very much indeed for your time. Thought-provoking as always, definitely a unique style of looking at the markets. Fascinated to know if some of these predictions work. That's it from FX Street, Currency in Play. Good luck out there trading. I wish you well. Thank you.